All right, Bulls and Bears back with another dose. BX4 back in the building. It is Saturday. It is March 15th, 2025. We're almost halfway through the month of March, the other M, the other M month. Almost halfway through the end of March and 31 days in March, right? So yeah, right around halfway. And we've got a lot of things to talk about, folks. We could be on the verge of seeing some massive, depending on how you look at it, either one, disruptions, or two, some very great things. And I'll let you decide if you think what I'm going to talk about today, if it's great, if it's scary to you, if change is scary to you, then what we're going to talk about today is going to be scary. But other people say the way things have been going with the U.S. And everyone pretty much just running off of borrowed money, the country borrowing money, individuals borrowing money, corporations borrowing money just to remain operational, just to keep their heads above water, so to speak. So if you're of that view, then these changes may be some optimistic things and some hope. All right. But we just want to piggyback off of some of the things we talked about in our last report. I didn't get a chance to get all the details in. It would have been another 20-minute video to fit everything in. But just like we talked about in my previous video, we've got Dollar General out there warning that the consumers are cash strapped. And they just closed or announced closures of 100 plus locations. And folks, this is a discount store, all right? And this is shocking to a lot of people. A very low cost store. You would think these stores would be thriving, almost like when the 99-cent store went bankrupt. I think a lot of this has to do with theft and what they call shrinkage in the retail industry. But yeah, another retailer warning consumers are cash strapped. See if I can talk today. Let's go ahead and get into it. And this CEO from this store, Dollar General, is another one warning that tariffs are going to bring on a lot of pain to the consumers. All right. So that's one view. One thing that we have is this negative view that tariffs are going to be nothing but inflationary. I, for one, think they will be inflationary. I think the tariffs right now, I think they're being used more as a negotiation tool or as leverage against these other countries. That's what I think. Because remember, we're not the only ones doing tariffs. Countries have been doing tariffs against the U.S. for many, many years. So some people would look at this as just getting even or trying to get it to be a level playing field. So it all depends on your view, right? There's many different angles people look at this thing. But here's something that is really, really interesting. This would be a game changer. This would be something we haven't seen done in 100 plus years, right? And this is the tax changes or tax reform, whatever you want to call it. And what's being floated out there, and this is not just some theory, this is actually being reported by many news outlets here. What's being reported is the thought or the topic of no taxes for people making under 150,000. Forbes, Bankrate, Reuters, many different outlets actually reporting on this here. This is the current administration's idea. Are they for real? Are they just saying this? If it's for real, folks, this would be a game changer. No taxes under $150,000. And it began, if you remember, many, many months ago with the talk of no tax for people making tips or no tax on tips, no tax for certain other individuals, certain groups. Well, now they're taking it a step further. And where does this end up? I mean, this is scary to some people. This is scary. A lot of people out there saying, well, how do you pave the roads? How do you build infrastructure without taxes? I could see why you're scared about that. But think about this. They print the money. They create the money. So a lot of people are already asking, if they're just printing the money, why not just print the money to pave the roads? So you and I have to pay for the roads, but yet they can just print the money to send trillions of dollars to all these foreign countries across the globe, right? So think about that. I just want you to think about how everything has been fed to us on this spoon, not even a silver spoon. It's been fed to us on a plastic spoon for like decades. And now people are starting to see like, okay, maybe this could work. And maybe the tariffs will bring in enough money to compensate for these taxes. And the higher prices from the tariffs, well, if people don't have to pay these taxes that are making under 150,000, then there's the extra money in the economy to buy goods at these higher prices. I'm just saying that, maybe this is a way to balance things out. And I'm not even saying it's going to happen, but it's being talked about. Just the fact that it's being talked about is unprecedented, right? I haven't heard anything like this even being discussed in my time on this earth. So let me know what you think about this. I mean, it's pretty interesting and could make up for a wild, wild year. We'll see how this plays out. Also, when it comes to taxes, think about where's your tax money going? Is it really going to build the roads, or is it going to some politician somewhere who you see their salary is like 150 or 200,000, but their net worth is like 60, 70, 80, 90, 100. All right, people, we had the markets recover on Friday, which was March 14th. We had the Dow Jones, S&P 500, NASDAQ, Russell 2000, all in the green. It was a pretty big recovery. We had, for example, the S&P up 2.3%, the Dow Jones up 1.65%. That was a positive gain of about 574 on that Dow Jones. NASDAQ 2.6 and Russell 2000 2.5. So big green days in the markets, making up for some of that big sell-off that we saw over the past, the whole beginning of the week pretty much was a sell-off because of the tariffs, because of the scared people there, the consumer sentiment dropping. We'll talk about that more here in just a minute. But the market's recovering. Well, a lot of it was on the back of the passage of this spending bill. And of course, they always have to pass the spending bill because the people that decide if the spending bill gets passed or not, their paychecks are dependent on the spending bill. So I've always said here, it's probably always going to be passed unless these people are going to shoot themselves in the foot because they know who is the hand that feeds. They don't want to bite the hand that feeds, so to speak, is one way I like to put it. Also, we have this other piece of news that just came out. Well, it goes hand in hand with the spending bill. So no government shutdown, right? Some people were saying, look out, the government could shut down this time. They could use that as a way to crash the economy. Nobody knows exactly what's being discussed behind the scenes, but we have to look at all these things and just try to make the best rationale observations here and use your discernment, and figure out the best path forward as far as investing goes, preparing for this, getting ready for this here. But other news, folks, I wanted to jump into the housing market a little bit here today. And we have an update on the D.C. housing market. Now, of course, this is the city with the most jobs being cut with all these federal job cuts that we've been seeing here. And what we're finding out is now inventory is up year over year, now 50%. In February, it was like 40%. Now it went up to 50% here in March. So we're going to see how this plays out. We're halfway through the month. Could it get even worse? Could it be 100% by the end of the month? Will it be basically 100% would be doubling what it was year over year? And that would be the biggest year over year gain in inventory of all the cities in the U.S. So that's going to be very interesting to watch. And are these cuts going to go forward, or will these be reversed with some sort of order or some sort of judgment? Will these ultimately even end up happening? Just like the whole tax thing, will that end up even happening? Will it be overruled by some judge or something like that? We'll have to see how it plays out. All right, but just as an example of how insane everything is right now, especially in the housing market, this housing bubble, median home prices still around 400,000 plus across the nation, with, of course, California, 800, 900,000, depending on your area. Mark Wahlberg, the actor, former LA mansion lists for $68 million. And that's not even the most expensive. That loses out to the most expensive home, which was $78 million in Florida. But look at this, not a very big home. And this home, you're going to have to hire a window washer. Look at all these windows. I wouldn't even want to live there. Not enough privacy, but I guess it's right on the water. Whatever, $68 million, Mark Wahlberg. He'll always be Marky Mark to me. Marky Mark, remember that song? Was it Good Vibrations? When I was a kid, I knew the lyrics. I knew all the lyrics to that song. Anyways, off topic here, but let's move on here. Still in the housing market. Affordable housing could be seeing some trouble with the current administration now shutting $1 billion off or pulling it out of an affordable housing program. And Lord knows most people need, I shouldn't say most people, well, yeah, most people need affordable housing, because if you ask most people, they're going to say that housing is one of the biggest areas, or the biggest area of their budget that's causing the most problem, whether it's paying the mortgage or the rent. And so now affordable housing is going to be cut off $1 billion. So where do you get the money now for affordable housing and other projects? Food banks are now warning that they're not going to have food for the amount of people that need the food with all these cuts that are happening. So that's the scary side of it. A lot of people see a lot of poverty and a lot of pain coming out of these changes. And other people see hope and optimism, just like I said at the beginning. And there's people out there that see a little bit of both, and they don't know exactly how to digest all this, right? So we've never seen so many changes happening and changes being discussed. So it's definitely going to be super interesting to keep an eye on. All right, but still on the topic of housing, I wanted to jump back into something we talked about at least a year ago, maybe closer to 2 years ago. I don't know exactly, but this was the 3D printed homes. And there was news out there at the time saying these are going to be a game changer. They're going to bring in affordable housing because homes are going to be made so much more quickly and cheaper without having to pay manual labor because it's all made by this gigantic 3D printer. Well, let's go ahead and follow up on that story here. And this is a report here. Homes in the world's largest 3D printed neighborhood take 1 week to print. And this is what they look like. It's called Wolf Ranch Community in Georgetown, Texas. And they claim to be the world's largest 3D printed neighborhood. And it features 100 homes printed with 3D technology. All right, so there you go. It looks like the walls are 3D. The roof just looks like wood to me. But it's pretty interesting. And we showed you this machine, this humongous 3D printer, how it makes the walls. It pours one line at a time. So it's like a big, remember corduroy pants? It's like a big corduroy pants type of texture that they're creating here. Here's the foundation. And I just want to play a quick clip. And here's the inside. I just want to play a quick clip of this. Take a look here. And here's some of the footage. See the printer going around and around and around. Now, the report that I just read claims that 2 homes per week are being built with this 3D printer. But this was a couple years ago when they first announced this. And I'm not seeing a lot of 3D printed villages discussed in the news. So I don't think it's taken off yet. And of course, we see home prices. This obviously hasn't fixed the problem. And again, it's been at least a year, but I think closer to 2 years since this really became a news topic. And here we are 2 years later, and home prices are still unaffordable. It's called Wolf Ranch, by the way. So of course, this hasn't fixed the problem. And even these homes are not cheap. Take a look at some of these prices. Right, I went over to their site here. And this is just north of Austin, Texas here. So we've got the high 300,000s, low 400, actually high 400,000s, right? Here's one 3-bedroom, 2-bath, 1574 square feet, about 380,000. 4-bedroom, 2-bath, 2010 square feet, 420,000. 3-bedroom, 2-bath, 2,000 square feet, 487,000. 4-bedroom, 3-bath, 2,112 square feet, 426,000. 3-bedroom, 2-bath, and a 1/2 a bath. So 2,051 square feet, 567,000. So where's the affordability, right? These are California home prices. Just 7-8 years ago, these were what homes were selling for in California. And this is over in Texas, which is normally a very affordable state. So where's the cost savings at with these 3D printed homes? That's my question. You know what I'm saying here? So if it was so much more affordable and cheaper, and obviously less manual labor because you've got the machine basically pouring all the walls, then where's the lower price? Where's the bargain at here? That's my concern. Or is it just another company price gouging? Remember the price gouging news we heard about earlier this year? And moving on here, folks, still on the topic of housing, we've got Canada. Canada, even a bigger housing bubble than the U.S. Things even more unaffordable in Canada than the U.S. Rents included, home prices and rents both. Well, rents are dropping now in Canada for 5 straight months. And rents are down, actually. Not sure why they're showing these people, but rents are down about 4.8% year over year. And that's actually even a bigger drop than in the U.S. here. So we see that on one hand, you say what goes up must come down. On the other hand, you look at some other things that still are elevated and they never came down. or maybe a little bit. Car prices came down a little bit. Home prices down slightly from the peak, but we're still up year over year. So a lot of things that people expected to happen, the bursting of these bubbles, has not happened. And that's because we haven't really seen a banking crisis. We see the banks continually getting rescued. We still have this emergency lending situation in place where banks can loan out money even though they don't have to have it in their vaults. They don't have to have it in deposits. So that's another thing keeping this whole thing propped up and keeping the bubbles inflated here. All right, moving on again here. This is another headline reading something similar to what the Dollar General CEO had came out and said, that the U.S. consumers are starting to crack, again with the fears of tariffs already adding to the already high prices, and now people are really starting to be concerned about their own budgets. So will this cause a major pullback in spending? Well, spending has already slowed down, even though debt is increasing. It's increasing at a slower level. Look at the last credit card report, for example. And on this topic here, consumers, it's a huge drop in consumer sentiment. Another report out, consumer sentiment plunged to a 2-year low, and it's likely to get even worse because we haven't even really seen impacts of the tariffs yet. And they go on to say in this NBC article, the preliminary results show the index fell to 57.9 compared with 64.7 just last month. So that's a big drop from month to month. And this is the lowest reading since November 2022. So that's more than a 2-year low. That's about 2 years and 4 months, 2 years and 5 months almost. So consumers are feeling the pinch. And with the layoffs and everything else happening, I mean, we could see a whole different world in just a few weeks here, not next year, just a few weeks. Even day to day, I think we're going to continue to see crazy things discussed and maybe even implemented. And I'd like to know your thoughts on this down below. I'll be reading your comments, but a couple more things to get into today here. And this is an example about how economies are made to look like they're growing, right? When the economy starts slowing, what do they usually do? Cut interest rates, find ways to make it easier for people to borrow money, have down payment assistance programs, like we've seen thousands of those pop up over the past couple years to help people get into homes because homes are so unaffordable. Well, look what's happening over in China. China orders banks to boost lending. So in other words, help make it easier for people to get into debt, to make it look like the economy is not slowing down, and also to boost credit card usage to get consumers to spend more, right? So you going into debt, that's what they'll brag about as economic growth. So they have to find ways to get people into more debt, right? Pretty interesting. It's global, folks. It's not just the U.S. This whole system of lending money and get people to go into debt to make it look like the economy is growing. It's global. It's the same formula across the globe. All right, folks, we're going to wrap it up with a little bit of good news. Egg prices down for 3 weeks in a row, folks. 3 weeks in a row. Egg prices down. Still very high, though. Not all the way down to where they started from by a long shot. Still a long way to go. But the average dozen now costing less than $5. That depends on where you're at. I can't hardly find them for less than $5 here in California. So a little bit of good news. I have been called in some cases a negative person, a doom and gloom person. Folks, I'm just giving you the news. This is not negative news. This is just the news, economic, financially. Home prices are still unaffordable for most people. Just ask the people that are in their 30s and 40s, still trying to save up for a down payment to get into their first home. First-time home buyers, pretty much priced out of the market unless you have 2 incomes or maybe working multiple jobs. But that's most people, but there's still the top 10% that's doing really well, and in fact, better than ever with all the debt. Remember, more debt that people take on, the wealthy get even more wealthy with the top 10% raking in even more, because most of the time when you go spend your money, it's at a place that's owned by a billionaire or a billionaire company, which is run by billionaires. Right? Not a lot of small business raking in huge profits, still enough to keep small businesses going. But the debt game, folks, they got to continue to expand the debt. We saw the budget passed, more deficits, more spending, right? So you have to look at that as well. The administration talking about they're going to come in and cut spending. They passed another huge spending bill. So we're seeing more of the same on one hand, But then on the other hand, we're seeing some surprising announcements and a lot of changes happening all at once, folks. So a lot to keep up with. Make sure you're subscribed, folks, right here. This button right below my finger. I think it's right there. Is it right there? Right? I don't see it till I edit till I publish the video. I think it's right there. Please click that button, folks. Subscribe. Make sure you're here. Keep stacking as always. We're going to stay on top of everything here for you. And let me know what you think down in the comments, everybody. We'll talk to you soon. Keep stacking. Bye for now.